Have you been worried about the best stock for you to buy in this new year, 2023? Worry no more. Buying stock and making much more profit is a great way to start the year. Not only can these stocks generate cash flow, but they also tend to appreciate value over time. In this video today, we'll be revealing to you the best stocks that you should buy this year for more profitable income for you. So let's dive in and explore the best stocks for 2023. Stock number 1, Amazon. Amazon is the world's largest cloud computing provider. The Amazon Web Services (AWS) platform has a larger market share than Microsoft's Azure or Alphabet's Google Cloud. You know Amazon as the mega e-commerce retailer. What you may not know is that Amazon does more than sell products online. For instance, Amazon earns commissions and sells warehousing and fulfillment services to third-party sellers, Amazon.com. Amazon also generates revenue through Prime, Kindle Unlimited, and other subscription services. The e-commerce giant's physical stores, including Whole Foods market chain, were purchased in 2017. Here's the good news. It's been a challenging position in 2022 for a better 2023. The profit comparisons will be much simpler for one. More importantly, Andy Jassy, the CEO, is focused on streamlining the company's cost structure. The bad news is that since the 1st of January 2023, Amazon's stock price has fallen about 50%. Amazon spends a huge amount of money in areas that are not profitable, including its international and device segments. The efficiency focus should be urged in strategic changes in those areas, including cost-cutting in ongoing activities like package delivery. Amazon repurchased billions in common stock in 2022 for the first time since 2012. The company has $6 billion remaining on its share repurchase authorization. Progress share buybacks would support higher earnings per share later. On top of those factors, Amazon's stock price looks cheap right now relative to its history. The consensus price target for Amazon is about $140, while the stock currently trades below $95. Stock number 2, Dollar General. DG. Quickly, I'll do a summary of Dollar General for those that are just entering the stock market. Dollar General is an established chain of discount stores selling consumer staples for low prices in neighboring locations. The company sells its privately branded products alongside popular goods from Clorox, Procter & Gamble, Kellogg's, General Mills, Coca-Cola, and many more. There are more than 18,000 Dollar General stores in 47 U.S. states. Dollar General stock is up 3% in 2022, even as the S&P 500 has fallen close to 20%. Throughout this year, the chain has reported an increase in foot traffic and in how much customers spend on each transaction. The pressure of higher costs is coming on Dollar General though. In response, company leaders are focused on streamlining their supply chain. Those efficient efforts can help with the current inflation trend, but will also create long-term advantages. Stock number 3, Apple. One of the effortless stocks to recommend in light of the most unweaving dam and for its products and swiftly expanding services business. Last year, macroeconomic headwinds highlighted the strength of Apple's business with the constant need for the stock. For example, in the third quarter of 2022, global PC shipments for the industry fell 15%. However, Apple reported the only growth among its competitors, up 40.2% during the period. The company's stock is down 23% year over year after a sell-off in 2022. However, Apple isn't so bad off when noting the 33% to 40% stock declines that its peers, such as Amazon and Alphabet, experienced in the same period. In fiscal year 2022, services revenue increased 14% year over year to $78.1 billion, while iPhone revenue rose by 7%. In addition, services reported a 71.7% profit margin, while products came in at a 36.4% margin. While the company's hardware remained in demand, its service business proceeds to boom. Apple has numerous highly anticipated products that is expected to be released in 2023 and continued growth in its services. As a result, its stock is a screaming buy this year and one you can hold for life. Apple proved the resilience and reliability of its business in an economically challenging year. Its stock price has grown 203% over the last 5 years despite a recent sell-off. Stock number 4, Eli Lilly. Eli Lilly is a pharmaceutical company that formulates important treatments for diabetes, Alzheimer's, obesity disease, immune system disorders, certain cancers, and COVID-19. Eli Lilly's stock is up 31% in 2022, an uncommon bright spot in a down market. The company benefited from a quarterly launch of its type 2 diabetes drug, Munger, plus growth from great cancer drugs, Verzenio, migraine drugs, Emgality, diabetes drugs, Trulicity, and many others. Company revenue grew 7% on a constant currency basis in the third quarter. Earnings per share in the same quarter increased 12% on a non-GAAP basis. The company distributes its products around the world through wholesale distributors and marketing agreements with other pharma companies. Economists and analysts extensively expect Lilly's momentum to continue, with appreciation to a strong product pipeline. Before the end of 2023, Lilly should launch 4 more products plus another major indication for Munger. One product to watch is donanemab, a treatment drug for early-stage Alzheimer's patients. Stock number 5, Shopify. Shopify looks like a clear choice for the best stocks to buy in 2023. Shopify has grown from 5 people in a coffee shop to over 10,000 across the globe. With millions of businesses powered by Shopify, Shopify cares deeply about the work they do. They're constant learners who thrive on change and seek to have an impact in everything they do. This is a platform that is designed to allow various kinds of businesses to trade their business online, with a certain focus on empowering smaller businesses and growing alongside them by establishing long-term relationships. Shopify's one-stop-shop approach to enabling e-commerce has turned it into a powerhouse. It now has more e-commerce sales flowing through its ecosystem than any other company besides Amazon. Shopify offers a subscription plan starting at $28 per month for businesses and also offers more adjacent services that help businesses operate smoothly, such as logistics and payment processing solutions. E-commerce is still in the relatively early stages, making up less than 15% of retail sales in the US. Shopify has the number 2 share, giving it a large lead over many of the world's largest retailers. Furthermore, Shopify could just be getting started. The platform has generated just over $6 billion in revenue over the past 4 years, but this is just a fraction of its estimated $154 billion and growing market opportunities as more retailers shift their focus to online marketing. With shares down sharply in the recent market downturn due to recession fears and signs of a slowdown in consumer spending. Stock number 6, Etsy. These could still be the early days of excellent long-term growth stories. Etsy is a global online marketplace where people come together to make, sell, buy, and collect unique items. We're also a community pushing for positive change for small businesses, people, and the planet. As you've been with us throughout this list of best stocks for 2023, make no mistake, Etsy is one of them. Few e-commerce goes head-to-head with Amazon and survive. Etsy is not just withstood Amazon rolling out its own handmade items platform, but it won. 2018, before the pandemic COVID-19, Etsy was a fast-growing stock by connecting craft makers with customers looking for something a bit more out of the ordinary than the actual stream economic fare. During the COVID pandemic, e-commerce got a very big boost, but Etsy skyrocketed, growing at more than thrice the rate of overall e-commerce. Because of its strategy and brand stability, Etsy's market opportunity is in the hundreds of billions of dollars, and it has just started to scratch the surface. With the stock falling significantly in recent growth stock downturn, now could be a great time for patient, long-term investors to take a closer look. It helped that Etsy was a natural fit when people wanted distinctive face masks. Its growth has been impressive across all product categories. In the second quarter of 2022, Etsy's marketplace sales quantity was up to 141% over comparable pre-pandemic levels. Stock number 7, Clorox Company. The Clorox Company is an American multinational manufacturer and marketer of consumer and professional products. This company has come a long way since 1913 when they started with bleach as their only product. Today, Clorox portfolio is made up of diverse brands sold in more than 100 countries and nearly every region of the world. They have products that clean the toughest messes and help kill germs in and out of the home. With this great portfolio, they're tested and trusted stock to invest in. Recently, Clorox announced that it will release its second quarter fiscal year 2023 results on February 2nd, 2023. Furthermore, CLX offers its shareholders a quarterly dividend of $1.18 per share. This results in an annual dividend yield of 3.23%. Meanwhile, looking forward to the latest trading action, CLX stock is trading at around $146.11. The company operates several business segments, including cleaning, lifestyle, household, and global. Notably, the company's most well-known brands include Clorox Bleach, Kingsford Charcoal, Hidden Valley Dressings, and Vitra Water Filtration Product. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.